Welcome to the 84th episode of Kanga Crypto News, your weekly pulse for fast, dependable updates from the crypto space. I am Kuba, here to brief you on the latest developments and the stories that matter the most. We publish new episodes every Friday. If you want to keep up with the most important moves in crypto, subscribe to the channel and tap the notification bell so you never miss an important update. And now, let's dive in. Let's start with Bitcoin and liquidity, because that's where half of this week's plot lives. Arthur Hayes thinks BTC can wobble but won't really crack. In his view, we chop below 90k, maybe stab into the low 80k, but 80k holds as support. His reasoning is macro. The Fed is set to end the quantitative tightening and stop its balance sheet roll-off on December 1st, while US banks have started lending more again. That combo, he says, brings minor improvements in dollar liquidity, easing the dollar squeeze that knocked BTC down to 81,000. He's nibbling here, saving the bazooka buys for the new year, and still sees a path to $200,000 to $250,000 if credit growth really kicks in. Zooming in on Ethereum, Bitmine is leaning hard into the dip. The ex-miner turned treasury giant just bought 17,242 Ethereum worth about $50 million on November 21st, bringing its total stash to roughly 3.5 million Ethereum, with an ambition to eventually increase its position to around 5% of Ethereum's circulating supply. It's funding this via equity raises, cash, and staking rewards, mostly through OTC desks like FalconX and BitGo to avoid nuking order books. The timing isn't exactly comfy. Ethereum has slid to about $2,800, down 11% in 24 hours after the October 10 liquidation wave. Chairman Tom Lee blames a lingering liquidity crunch among major market makers, comparing it to a 2022 episode that took roughly 8 weeks to heal, and says we may need a couple more weeks before the pressure truly fades. Bitmine's own stock, BMNR, dropped over 10% to around $26, but the firm isn't backing off the accumulation plan. Over in Stockland, Cathie Wood is playing the same continued accumulation strategy via Ark Invest. On Thursday, Ark snapped up about $10 million of Coinbase stock, lifting coin holdings in ARKF alone to nearly $58 million and more than $500 million across 3 ETFs. They also added over $9 million each of Bitmine and Circle, $9.75 million of Exchange Bullish, and roughly $6.7 million of Robinhood. Wood maintains a long-term bullish outlook on BTC, but she trimmed her 2030 target from $1.5 million to $1.2 million per coin, partly because stablecoins are capturing more of the payments narrative. With Bitcoin trading near $83,000 and down over 4% in a day, that implies a still insane 1,335% upside if her thesis plays out. On the dip buyers with a personal brand front, Dave Portnoy also revealed his recent crypto purchases. As Bitcoin broke below the 90,000 handle for the first time in 7 months and the whole market bled, he says he snapped up over $2 million in crypto, roughly $750,000 in Bitcoin, $400,000 in Ethereum, and $1 million in XRP. He'd previously promised to buy XRP if it dropped below 220, and when it hit 212 during the sell-off, he pulled the trigger. On-chain, he's part of a bigger pattern. One whale amassed over 30,000 Ethereum between November 3rd and 10th, about $110 million. Strategy added over 8,000 BTC, and BlackRock moved around over 3,000 Bitcoins plus 64,000 Ethereum into a Coinbase Prime account. Retail activity shows signs of selling. Whales and institutions are increasing their long-term holdings. All that whale action dovetails with a very specific capital magnet, XRP ETFs. Franklin Templeton's Franklin XRP Trust launched today on NYSE Arca with a 0.19% annual fee. but fees are waived on the first $5 billion in AUM until May 31st, 2026. A big carrot for early adopters. Analyst Chad Steingraber expects 15 to 50 million XRP to trade on day one, roughly $30 million in value, mostly driven by net inflows as advisors begin allocating. XRP itself has broken above $2 and is up nearly 3% in 24 hours. Franklin joins a growing pack. Canary Capital's XRPC debuted earlier as the first US spot XRP ETF. Bitwise rolled out its own XRP ETF with a 0.34% fee, and 21 shares plus others are circling. In parallel, the SEC is processing 6 XRP ETF applications, which will signal just how far beyond Bitcoin and Ethereum the regulator is willing to go. Grayscale is piling on to the same theme but with meme spice. Its Dogecoin and XRP ETFs started trading on the NYSE this week after NYSE Ark formally certified both listings 2 weeks ago. Bloomberg's Eric Balchunas expects GDOG to see around $11 million in the first day volume, and a Chainlink-based ETF is queued up for next week. On the XRP side, Grayscale launch joins Canary, Franklin, Bitwise, 21 shares, CoinShares, and the pending Wisdom Tree product in what's quickly becoming one of the most crowded ETF segments in crypto. The irony? Despite the ETF boom, XRP is still down nearly 18% in November, reminding everyone that shiny new wrappers don't guarantee instant price gains. For Dogecoin, 21 shares is also teeing up Doge ETF on Nasdaq, waiting on the SEC. Structurally though, these listings matter, as they give both retail and institutions Doge and XRP exposure through plain vanilla brokerage accounts. No wallets required. On the derivative side, CME is making it easier for pros to play the same names. The exchange is launching spot-quoted futures on XRP and Solana, targeted for December 15th, pending regulatory review. Instead of quoting some abstract futures price plus-minus basis, these contracts trade directly at spot, with the cost of carry handled via a daily financing adjustment in PNL. The XRP contract represents 250 XRP, the SOL contract 5 SOL, both cash settled, cleared via CME Clearport, and tradable on CME Globex. They will come with expiries out to 1 year, so investors don't have to constantly roll over every month or quarter. It's the next step after CME standard XRP and SOL futures and their recently launched options, which already drove record volumes in October. Net effect: lower learning curve, smaller contract sizes, and more familiar mechanics for traditional traders looking at altcoin exposure. Corporate treasuries are quietly turning into leveraged Bitcoin plays. In Tokyo, Metaplanet plans to issue Mercury Class B preferred shares to raise 21 billion yen, about $150 million, from overseas institutions. The prefs pay a 4.9% annual dividend and are convertible at 1,000 yen per share, capping potential dilution at roughly 2%. The board approved the plan on November 20th, 2025, with shareholders voting at an EGM on December 22nd. Metaplanet already holds almost 31,000 bitcoins and wants to ramp that up to 210,000 bitcoins by 2027. Around 15 billion yen from the raise is earmarked to buy BTC between December 2025 and March 2026. Mercury is structured as a hybrid, steady quarterly dividends plus equity-linked upside if the stock rips. And the news pop sent Metaplanet shares up over 4% even as BTC fell. Alongside Mercury, there are Mars Class A prefs with adjustable monthly dividends, plus a reshuffle of stock acquisition rights with Evo Fund. The strategy leans fully into BTC, but it's not risk-free. Fixed dividends plus potential regulatory or rate shifts could pinch liquidity if Bitcoin tanks. On the infrastructure side, Ethereum is trying to solve one of its biggest UX headaches: everything feels like a patchwork of L2s. The newly revealed Ethereum Interoperability Layer, the EIL, is designed so any Ethereum L2 can talk to any other L2 in a way that's instant, secure, and mostly invisible to users. In the ideal endgame, you would sign a transaction once and your wallet plus network would handle all the chain hopping, bridging, and routing in the background. No more "which network am I on?" anxiety. The roadmap starts with shared standards and cross L2 messaging, then moves towards real-time, trust-minimized communication. Importantly, each L2's TVL, apps, and usage stats stay intact. It's the user experience that gets unified. If it works, Ethereum starts to feel like one big chain again, which is a major win for mainstream adoption. Finally, back to nation-state Bitcoin games. El Salvador just had its biggest single-day bump in BTC holdings. President Nayib Bukele says the country added 1,000 Bitcoin at about $100 million as the price hovered near a 6-month low, pushing the national stack to roughly 7,500 Bitcoins worth $700 million. The official dashboard showed a 17% jump in holdings versus the prior day. The IMF, however, has suggested that some of these jumps are just internal transfers, not fresh buys, which matters because of a $1.4 billion loan deal that required El Salvador to scale back Bitcoin initiatives, making BTC payments voluntarily, and reduce its role in the Shiba wallet. The government disputes the narrative and insists Bukele has kept buying since his 2022 1 Bitcoin per day pledge, when BTC was around 16.7 thousand post FTX. At Bitcoin's recent $126,000 all-time high, the stash was worth nearly $800 million. With the pullback, about $200 million of that has evaporated on paper. A previous dashboard screenshot showed an unrealized profit of about $475 million, but that line quietly disappeared. On prediction, markets like myriad traders are split 50-50 between greed and fear, a tidy summary of how the world views Bukele, all in bet. The big picture, across these 10 stories, short-term price action looks messy. Crashes, liquidity squeezes, and ETF day disappointments. But the underlying trend is clear. Corporates, ETFs, whales, nation-states, and core infrastructure teams are all building deeper roots into Bitcoin, Ethereum, XRP, Solana, Doge, and the rails they run on, even as retail flinches at every red candle. That's it for today's Kanga Crypto News. If you enjoyed the episode, please like, share, and subscribe to stay current with all the latest news. As always, stay informed and stay ahead in the blockchain world. See you next time.
We are Kanga, beyond crypto.